get are a victim of identity theft, change your social security number immediately. Call all the credit agencies, Equifax, Experian, TransUnion. Freeze your credit report. Also freeze your check systems report, because it is possible someone can open up a checking account under your name and make it negative. That does happen. And then also file a police report immediately. And also inform all your credit card companies that you're a victim of fraud, because if your credit card company notices on your credit report that all these fraudulent credit accounts are getting opened under your name and all this activity is happening with your social security number, they may think that you'll default with them. So inform your credit card companies that you're a victim of fraud and no negative action should be taken against your account. You don't want them closing your credit card. That'll negatively affect your credit scores. If for those of you that have a job, you need to start saving for retirement right now, regardless of your age, 20, 30, 40. If you wait too long, it's going to be harder to save for retirement. You need to open up an IRA, an individual retirement account, at a credit union or community bank. I'm not going to badmouth brokerage firms such as Edward Jones and whatnot, but from my understanding, they usually charge expensive fees. So that's another option, but be aware of the fees. An IRA is an individual retirement account. There's two types of IRAs. There's a Roth IRA and there's a traditional IRA. Roth IRA means you pay taxes on the money and then it goes into the account. It's called after-tax dollars. However, the money that you put into the Roth IRA, you cannot deduct it from your taxes. And the beauty of a Roth IRA is that the money, the interest that you make, the earnings, it grows tax-free. As long as the Roth IRA exists for 5 years, when you turn, I think, 59 and a half, and you reach, that's the age of retirement, and you take the money, you won't have to pay any taxes or 10% tax penalty or anything. A traditional IRA, you can deduct it from your taxes, but when you take the money at retirement, then you have to pay taxes on the interest and pretty much all the money within the IRA. I like Roth IRAs because even before retirement, you can take the money that you deposited, not the interest, and pay no 10% tax penalty, and you can save your house from a foreclosure or your car from repossession. That's why I'm a fan of Roth IRAs. And you don't pay the 10% tax penalty with a Roth IRA if you take it before retirement. However, you can't take the interest. Spread this message because many of you do these things, and please tell all your friends not to do these things. Don't get a payday loan, or on the internet, I'm sure you've seen, come to us, bad credit, no credit, we'll give you a loan, guaranteed approval. Don't go to those places. A payday loan is, let's say if Professor Wright has a bill of $50 that's due on Friday, and she has $0 in her bank account, and she gets paid on Friday. So what Professor Wright could do, she could go to a payday loan provider, she could write them a check for $50, and then they'll give her $50, but they're also going to charge her interest and fees to give her that $50, and then on Friday, she can pay her bill, and then they're going to try and take the money out of her account, but they're also going to try and charge her a bunch of fees. Payday loans have interest rates ranging from 100 to 800%. I'm not even kidding. And you cannot deduct the interest from your taxes. Avoid bad credit card dealerships such as Drive Time. The catch with those is that they sell you a car, but it's very, very expensive, especially for a used car. It's actually more expensive than a new car. And they charge you an interest rate anywhere from 15% to 25% on the auto loan. You're better off just saving for a car. Don't get a car title loan. A car title loan is when you basically give the title of your car, the ownership right, to the car title loan company, and they give you loan money. And if you don't pay back the loan money, they get to keep your car. And it's very dangerous because car title loan companies, they also charge you interest rates ranging from 15 to 36%. Some do charge over 100%. I was looking on the internet. And the goal for them is to make as much profit off of you as possible. The amount of money you pay them will eventually double and triple. So avoid car title loans. Don't get a loan from a pawn shop. Those are very bad too. They have interest rates ranging from 15% all the way to 200%. You'll see them all over the internet. Don't get a cash advance loan, and don't take cash advances from credit cards. Don't get any really high expensive credit cards. A subprime lender is a creditor that gives credit to people with little or no credit, such as Capital One. They're a subprime lender because they have credit cards for people that have no credit history. Not all subprime lenders, but many subprime lenders give you very expensive credit cards, such as ones with 36, 59, 79% interest rates and annual fees. Avoid getting those kinds of credit cards. Get free credit cards from credit unions. Avoid for-profit schools. Many employers think people who get a degree from a for-profit school, you basically purchase the degree like merchandise you would buy at Walmart. They don't think you had a challenging curriculum. They think the school gave you the degree because you gave them so much money. Employers think that. Do not withdraw money from your IRA, individual retirement account, before retirement, or your 401k or 403b. 401k is if you work for a for-profit organization, your employer gives you a special retirement plan. That's called a 401k. It's basically structured with stocks and everything, and you get tax benefits too. At any time you can withdraw the money, but it's dangerous. When you withdraw money from an IRA or 401k or 403b, 403b is for nonprofit organizations. When you withdraw it before retirement, you have to pay ordinary income taxes and a 10% tax penalty, and that's not cheap. Taking a loan against your 401k and 403b, I don't recommend it, but in a situation where you need to save your house from a foreclosure or your car from repossession, take a loan against your 401k, but make sure you pay it back within 5 years. Because if you don't pay it back within 5 years, then you get into trouble, because then you do pay tax penalties, and it becomes what's called a withdrawal. And you also have to pay ordinary income taxes. And here are the interest rates for payday loans. I don't know if anybody can see that, but 391%, 347%, 325%, and you can see how outrageous they are. So don't get payday loans, don't get card title loans, don't get cash advance loans, don't get those loans on the internet that cater to people with bad credit. Don't do it. The people are going to make them very attractive, but they're scams and they're ripoffs. Closing remarks. Again, paying your bills is very important. We're in a credit crisis right now. The student loans crisis is emerging. If the Congress does increase the student loan interest rates, it's very likely many people will default because they won't be able to afford the payments. And then banks will have losses and will very likely fall into a recession. So it's very important to pay your bills. And interest rates for everyone will increase because the banks and the government will try to compensate for the loss. They're going to try and make more profit. Employment will not improve if many people are defaulting. Many of you are probably getting notices from your banks that they're now going to start imposing a fee just for having a checking account or a savings account, such as a $5 monthly fee. I'm sure many of you saw on the news that, for example, Bank of America is now going to charge you a fee just for having the checking account. You have to maintain a certain balance to avoid the fee. The reason why banks are doing that is so you use your credit cards more, and also they're trying to make up for losses they endured from the housing crisis and losses they're still having. They're trying to make up for all those delinquent credit cards. So if people are still defaulting, then it's very likely banks will continue imposing all these different kinds of fees. Again, if you have bad credit, it shows that you have low character. And I'm not trying to be rude with that comment. That's how employers view you. That's how banks view you, because in their mind, you're taking loan money from people, and in a sense, you're stealing from them because you're not paying them back. You don't have to be an expert to have excellent credit. It's very easy. Just pay your bills. No matter what interest rate, no hardship, whatever hardship you have, always pay your bills. Always work with your bank. Always inform them if you're in some sort of struggle. They'll work with you. They're trained for these situations. Don't just let the account become delinquent and let them keep calling and ruining your credit. You don't want the level of delinquency growing on the accounts. 30-day delinquency becoming 60-day, it all lowers your credit score.